and I eventually started selling some at like 350. I ended up selling more at like, I think above 400. And then I got really lucky with this last gap up here, sold the rest at like 520, but ultimately made over $600,000. My best trade to date, not only in terms of P&L, but in terms of execution, to be able to really be in well before the run started and then actually get most of my size out relatively close to the top, if not at least the top day. It's going to be a while, if ever, that I ever top a trade in this level of magnitude and precision. I have a question for you. Have you ever heard of the term needle mover or chasing unicorns? If you haven't or have, I think this is going to be a good video because this is kind of the realm which I think very, very profitable traders end up finding themselves. First off, in this video, we're going to break down what on earth that is, and then let's go into some examples of what those needle movers are. Before I do that, I want to give credit where credit is due. David Hanlon, laptop legend, he spoke at our March 2025 bootcamp, which is a little bit under a month ago. And his presentation was all about needle movers. Now, his presentation was, an hour plus long. I'm not going to be able to get into the details of his presentation. More importantly, it's his presentation to go over. Maybe if you go to an in-person event in the future, you'll be able to see him do that. But I want to just shed more light on it because I think it's such an awesome concept for traders who really find profitability and then want to scale their trading to the next level. So without further ado, let's jump in. What on earth is a needle mover, or what a lot of people in Clover call chasing a unicorn, right? There's very average setups all over the market, right? And we talk about breakouts a lot. We talk about first red days a lot. We talk about first green day reversals. If you're in the Clover room, you know all about these. A lot of them are just average setups. And I don't mean average in a bad way. They just happen frequently. They offer the same edge that the last one offered. You take them over the period of time and you end up profitable if you trade them well and have good risk management, good psychology, etc. That's all great and fine. However, there are sometimes scenarios that maybe appear in that setup or in those setups, or even not even setups at all, just true one-time kind of unique opportunities that have some kind of story or some kind of edge or some kind of market psychology behind them that give it an extra boost to the point where they are so unique that anyone who recognizes this inefficiency or this opportunity becomes much, much greater than any one little or standard average setup can offer you, right? And the point of doing that is that if you take those trades and they do work out, the story that you have, that the story that's been built around the opportunity does play out, it turns usually into a trade that really moves the needle in your account, right? It's not going to give you a small average gain or a small win or a small loss. It's going to give you a gain that's usually much, much bigger, hence moving the needle in your account, right? It's actually making a massive difference compared to an average trade. We also call it chasing unicorns because it's like a very unique scenario. One kind of unicorn that looks this way, that's a trade setup, and it's only going to happen this one specific time in this specific way. And sure, there are other unicorns that'll come down the line, but like this unique scenario pops up, and there's rarely going to be a scenario like that, at least in the present time. Maybe in the future we'll find out, oh my God, this is exactly like the previous unicorn we saw. But again, it's so unique, it's so rare that it offers an opportunity that you wouldn't be able to find on your everyday or really every month or year kind of basis. With that being said, let's jump into some of the, needle movers or the unicorns that I personally chased and caught, and why I think they're, a needle mover or a unicorn. Now, again, everyone's style is different. What may be a needle mover or a unicorn to me may not be one for you. But you may find something that's super unique and efficient in the options market, but I don't trade options. So ergo, I'm not going to really capture that move. That's okay. With that being said, we're going to go over 3 needle movers that I personally caught, one very recent, one very midterm, and then one actually about a little over a year ago. So the first one is most recent, which happened literally this month in April, NMAX. Now, NMAX is kind of a media company, a news source, and they just recently IPO'd. They re-IPO'd at $14, I believe. And within 2 days, they're touching as highs as 260. So almost a 2,000% increase in just 2 days. Okay, that is not normal. That is already extremely, extremely volatile and explosive to the upside. But again, this isn't that unique, right? If you trade small caps like I do, this doesn't always happen, but this isn't super uncommon, right? We see this happen, I don't know, every other month or so. Like, it's not like it is that rare. But that being said, what more about NMAX made it so unique? Well, yes, the extension is explosive, that's great. But first off, there's some things I found on Twitter that I wanted to share with you. And again, I confirm this in terms of confirm as much as I can to my own ability. But the first one is what its value was when it was at its high. So Charlie here, great resource. I follow him on Twitter personally, provides a lot of value in terms of moments like these. So at 32 billion, NMAX market cap is now higher than 235 companies in the S&P 500 index. So well overvalued over half the companies. And again, this is when, it's up here in the high 200s. Meanwhile, its sales are only 156 million, which is higher than none of those companies. So it is overvalued by more than half of the companies in the S&P 500, but has revenue that is below all of them, just to show you the disparity, at least the overvaluation fundamental perspective of the company. Okay, so that's all great and dandy. So we can confirm and know that, hey, this company is insanely overvalued from a sales perspective in the 200s, but that isn't necessarily enough, right? There's a bunch of overvalued all over the world or all over the stock market, right? That does, just because something's overvalued doesn't mean it has to come down. It maybe eventually will. Fundamentals can take a long time to play out and generally do play out, but again, that doesn't mean it has to happen right when we want it to or right when we find out it's overvalued. What more to the story that really added an edge that made it that kind of unicorn, that kind of unique scenario? Well, there was another tweet from Nate Mashad, who's again an incredible trader. Also recommend following him on Twitter. Very good guy. He also tweeted this from his sources, okay, that he found. And essentially, when stock IPOs, usually there is a 6-month lockup, which means the company or the insiders of the company who have shares have to wait 6 months to sell said shares, right? However, in this example, there are certain IPOs that don't have a lockup, where you actually can sell all or at least a portion of insider shares the moment it starts trading. However, those shares have to get delivered to the insiders' brokerage accounts. They own their shares legally, they own their shares just on a piece of paper when they're public or when they're private, but when it goes public, now those shares can physically be delivered into their brokerage accounts to then actually sell them on the open market. However, there were some rumors and or some speculation going around that those shares getting delivered to those insiders' accounts were taking a long time. In fact, they were taking more than 2 days. And so you read it here, respond to inquiries in 24 to 48 hours due to high call and volume or email volume. Will respond to all shareholders' inquiries. Kindly apply or continue to monitor the email request, yada, yada, yada. Also here, again, he's made sure her sources from Jerry here, equity intentionally not delivering IPO shares to investors in order to artificially keep the float low. Right? If that makes sense, why the stock is trading so high and most IPO investors are unable to sell. If this is true, this is a crime. It's actually, that's not really legal. Sounds very gray area, very sketchy. But again, if that's true, and insiders can't sell, at least for the first 2 days, for technical reasons or whatever the reason is, or intentionally, right, which could be illegal, it explains why the move was so volatile and so big so quickly, okay? However, I'll never truly know, but if we go into like the daily chart here, or the intraday, by day 3, I guesstimate, I speculate that insiders were then given their shares. And again, if you're an insider of a company like this, you probably own shares at the IPO price or much, much lower. You could own them a sub $1 and you'd be up thousands of percent. I forget 2,000, how about 10,000%, something crazy, right? Who knows? But again, on day 3, I had a hunch that if they were eventually going to get delivered, those insiders would sell. And if they sell, they're up so much, they don't care about crushing the stock because who cares when you're up thousands of percent? The last thing you want to do is give away those gains and now watch it only be up from thousands to only a couple 100%, right? And the one thing what tells me, or what maybe makes me think that's possible, is one, it already gapped down huge, right? If we go to the previous day, it closed up in the mid 200s. It's opening down sub 200s, so already a massive gap down, okay? And so in most cases, I would not care to short this. The risk reward for me from, risking all the way up to the red green level down to where it's trading at is not in my favor. I usually can't stand doing that. However, given the scenario I knew, given the story I was starting to build around this particular ticker, around this scenario, I thought to myself, there's a world it's worth chasing and getting short on this big gap down, because if eventually shareholders can sell, it could get very ugly. That was kind of the thesis. In fact, I actually said this on the Good Morning NASDAQ show that morning, said like this is at, 160s, 170s, but this might go sub 100. I literally said that before it happened. And I just needed to find the right entry spot. And so I actually missed this morning pull. I saw this morning spike, or this morning bounce back. And once it failed, I thought to myself, if this is it, again, it's a big if, I didn't really feel confident that it was, but if this bounce is it, this could be the last spike high you see. And if I could risk that high and have it not break, then I might give myself a chance to catch what might be or could be a big fade, right? And so that's exactly what I did. I got short here in the 150s, risking this like 168 high, and then let it play out, right? I pulled back. So the good part is I initially got good confirmation that this was working, bounced back a little bit, that bounce failed, but then late day, it really fell apart. And forget sub 100, it went to $50 by the end of the day. Now, where do the insiders come into play? Again, I'll never truly know. But what I do want to highly speculate on is that the volume in the afternoon was actually bigger than in the morning. That's very rare, and the only times that I have experienced that, or at least I have understood why that might be happening from previous tickers I've seen in the past, is there's massive dilution, which we know NMAX doesn't have just yet, it's just a new IPO, or there's insider selling, which is not dilution technically, but it's a form of increasing the public float because it's going from shares outstanding being personally held by insiders into the public float where you and I as retail traders could buy. So technically the float is kind of expanding, but the shares already existed, if that makes sense. But anyways, those are really the only two scenarios where I see volume get bigger in the afternoon, or there's like negative news or something, that causes maybe a chain reaction post open. But that's really it from my experience. And so there was no news, there's no dilution. Why would volume get to be massively bigger than the opening? Again, I'll never know, but I have to assume, knowing what we know about the story and about the scenario, I have to say guilty until proven innocent. There are insiders here selling their shares. And again, because I was thinking 100 and it went even 50% below that to by 50 by close. Again, I'll never know, but I will die thinking that this is what happened. Okay. Whether it didn't happen, again, it doesn't matter. The point is, I had the thesis and the market proved to me right whether the actual reason of the thesis was correct. And so to show you my actual trade on it here, again, I shared this on Twitter, but also in the room, I ended up making $65,000. So huge. Again, this is a needle mover. My average gain is not $65,000. My average gain isn't even $30,000, right? It's maybe 10 to 20,000. So to make a 2 or a 6 to 3x bigger, that's a needle mover, right? That's a big trade. But again, like I said, I got short in the 150s. I actually did have a little bit of an ad when it bounced there midday, and then I covered at like 85 and like 70 and then 60, and then at the end here at like 52-ish. So again, it was a needle mover because it went much lower than I expected. Like I said, I originally thought sub 100 or at 100, but I got a little bit better of covers. But all in all, this wouldn't have happened, or I wouldn't even been able to conjure up this trade plan had I not understood the scenarios of A, the overvaluation, but more importantly, B, the idea that insiders might be able to sell, or they're selling late, and when they do, it offers a huge inefficiency. Because again, if the insiders could have sold from day one, they would have sold when they're up 100%, 200%. They would not have waited for this to go up 2,000%. Okay, so it's a very unicorn-esque scenario. It's not every day that this kind of happens, and because it did, it offers an efficiency that people who understood and knew the story and willing to take the risk, like myself, profited greatly. Okay, so that's the cool part of this first needle mover unicorn chase that I caught.
Ever dreamed of trading like one of the Clovers? Well, it all starts with choosing the right broker. Clover Trading and Cobra have teamed up to supercharge your trading experience. By clicking below, you'll unlock the power of Cobra Prime. We're talking top-tier trading tools, saving you hundreds of dollars. Get ahead with real-time scanners, cutting-edge news, 30 days of commission-free trading, 30 days of free DAS software, 60 days free of Ask Edgar, and so much more. Imagine all that, plus superior short inventory, personalized support, and interest on your idle funds. But it doesn't stop there. Cobra offers competitive pricing on locates and commissions that fit your trading style, with the ability to trade stocks, futures, options, and other products. If you're under the pattern day trading rule, Cobra has a unique solution for you. Venom, a platform designed for traders with smaller accounts to go long or short on small and mid-cap stocks. Ready to elevate your trading game and save big? Click the link below to access exclusive deals only available through Clover Trading and Cobra.
Another one that happened last year in November was MSTR. Okay, I'm sure most of you, if you follow the momentum space or just have been trading for a while, watched or heard of this ticker when it was running huge. And this one arguably, and again, I've already made video lessons on this. I've talked about this a bit publicly, certainly in my own trade recaps on my own YouTube channel, but I'll go over it very quickly again. This one was actually a bigger long trade than me than a short trade, because the short trade for me, this pullback was a very good trade. I would consider it A+, even though I didn't necessarily take A+ risk on it, but it offered a very good backside move. And again, A+, but to me that was, and it would have been a needle mover, but I guess I can almost argue with myself, I almost wouldn't consider a unicorn per se, because there are plenty of very big red days that happen like this. Do they happen all the time? No, maybe once a year, right? Maybe a couple times a year, but there are days that offer like this, right? The unicorn aspect, the very unique part about it, I think, was the long thesis I had in why it was going to run up in the first place, okay? Now, to briefly talk about it, well, one, it's a huge breakout over 200, right? This had a beautiful channel between 200 and 100 for what looks like 6 to 7 months, 6 to 8 months. And once it broke out, I mean, you didn't even have to know the thesis per se. As long as you trusted the breakout and had a good trade plan and had patience, this was a great move over the next 2, 3, 4 weeks, a couple months. But besides that, why did I even get long? Because I didn't buy the breakout. I started buying all up in here in the 130s, like 135, 134, 136, all throughout August and September. So why on earth did I do that? Not to go into too great of detail, but MSTR buys Bitcoin. That's really their whole business model. It's kind of funny because they have a whole business model that they still kind of go about, but like it's such a small portion of their actual business now that it's not even really their business, right? Their business now is buying and holding and being a treasury of Bitcoin. The way they do this is they actually will dilute their own stock, and they do it at such a minimal price or a minimal amount that the shareholders don't really can tell. It's not like they're diluting their stock into the ground. They're diluting it very slowly or very precisely. But by doing so, they then get cash in return. They go buy Bitcoin and then they hold it on their balance sheet. Nothing about that is special, right? Any company can really realistically do that. What got special about this is that the way they do dilute and the type of dilution and or debt that they go into to buy Bitcoin, it makes their Bitcoin per share ratio go up. Now, again, not to get too complex here, but let's just hypothetically say, and this isn't the true ratio, but let's just say if you own 1 share of MSTR, you own 1 Bitcoin. Again, that's not realistic, but let's just, for simplicity numbers, let's say that's the case. Then MSTR dilutes their stock. Let's say they dilute their stock by 10%. They'll take 10% or all that cash of the 10% of the company, let's say, they'll go buy Bitcoin. And now all of a sudden, my Bitcoin per share is not 1. I don't own 1 Bitcoin per share. I'll own 1.4 Bitcoins per share. So same stock price, I'm still able to own 1 share, but instead of owning 1 Bitcoin indirectly, I now own 1.4 Bitcoin indirectly. And so they started calling the chatter on social media, they started calling this a Bitcoin yield, right? So it wasn't a dividend by any means, but there was at least a perceived yield of growth in terms of what Bitcoin I indirectly owned by owning MSTR. And again, knowing MSTR's history, this is not the first time it's had a big run. I also knew back in 2021 when Bitcoin was hot, MSTR also had a massive run, and they weren't doing nearly as much yield or buying Bitcoin as they are now. So I had thought to myself, if Bitcoin can run and MSTR is doing what it's doing, it's going to offer another massive move. And then once I understood at least the concept of the yield, I thought this is going to be big, right? If it works, again, it could be a big if, but if it works, it's going to be big. And so that's when I started buying. Okay. And the yield kept growing. They kept diluting more and getting more shares, and that yield kept going up per se. And then the parabolic began and there was no coming back. And I eventually started selling some at like 350. I ended up selling more at like, I think above 400, and then sold more at like 480. And then I got really lucky with this last gap up here, sold the rest at like 520. And then it died. And all in all, between 90% profits for the long, I made a little bit on the short side on the first red day, but ultimately made over $600,000. My best trade to date, not only in terms of P&L, but in terms of execution, to be able to really be in well before the run started, and then actually get most of my size out relatively close to the top, if not at least the top day. It's going to be a while, if ever, that I ever top a trade in this level of magnitude and precision. But again, it was a unicorn, right? There's other companies that are doing this kind of strategy, but they're not giving you the kind of move that MSTR does, because MSTR was the first one to do it, right? And they're the first ones to do it in a way that is so unique. And again, whether their strategy of how they do that is successful long term, there's a lot of speculation of like, oh, it's very risky, it's very sketchy. Sure, that's fine. But again, I'm a trader. I'm not here to guess what the long-term outcome of that is. All I know is the perception of how the market's going to view it in the short term. And that is why we got such a unique example. And ergo, it was a massive trade for me. Again, a massive needle mover by all means, but then of course, a very unique unicorn-like scenario. So last example, DXYZ. Another IPO, but different from NMAX, and I'll share with you why. Because we're not talking about this run, we're going to talk about this run back here. And now I've probably done more video lessons than I want to count in the Clover room. So if you're in a Clover room, or at least we're back in April of 2024, you know all about this idea. So in this example, DXYZ opened around $8. Okay, now, however, DXYZ is an IPO, but it's not a traditional company like NMAX or MSTR. It is a holding company that holds private companies. So it is a public company that their sole business is to hold private companies, to give investors access to private companies where they once couldn't, or still can't. So like DXYZ owns a bit of Discord. It owns a bit of, I think, Epic Games. It owns a bit of SpaceX. I think its biggest holding is SpaceX, right? So anyone who knows that about DXYZ and wants access or their money indirectly in some of these private companies, DXYZ would be something they could buy. However, because the way that is structured, they have what's called an NAV, or a net asset value, meaning all of the investments that DXYZ has made, there's a general and objective value of what those investments are worth. Ergo, it's going to give DXYZ a price that it should be valued at, because its only value is what its investments are worth. Now, the NAV of DXYZ was around $5. Okay, now there always will be a little bit of a premium because investors are willing to pay a little bit more to have access to those private companies or to get, their risk on the table to those private companies. But at what premium is too much? Because, within 2 weeks, this thing is now at $100. Like if all these private companies are worth $5 in DXYZ's holdings, are you really going to buy Discord at a 20x valuation, right? If you should own it from 5, are you going to really buy Discord at 20x valuation through DXYZ? Probably not. It's probably a very bad idea, and certainly buying something very, very overvalued. And so again, that's the story where any one typical runner like this is still a good technical runner. But once you understand the story behind it, the overvaluation, the fundamental situation behind it, then it builds a story of willing to be more aggressive. And so that's exactly what I did. I shorted this day. I ended up covering it in like the 60s. I think I made another like 60 grand or so trade on this one. But not only just there, I also then started shorting all these bounces on the way down. I think I ended up covering somewhere in the 20s here, or even lower. I think I made it to sub 20 if I'm not mistaken. But I kept coming back for more because I knew the true fundamental valuation was at 5, and over time that was going to play out. Now, did this play out much, much sooner than I expected? Oh, totally. Like I said before, but with NMAX, just because NMAX is overvalued, it doesn't mean I don't know how quickly it's going to come down. But I did that in the case of DXYZ just because I think the overvaluation was a little bit more insane in terms of just like objectively it's worth $5 and yet somehow it's up at 100. But again, the fade just happened beautifully. On top of that, I think it was one of these days, either this gap down or this day, insiders, again, it's actually very similar to NMAX when I think about it. The CEO, I believe, the CEO and some other people came out and said, yeah, they sold shares. But the crazy part is they didn't even sell shares when it was up here. I think it came out with a filing that they sold shares in the 20s. Right? So it was already well after it happened because again, nothing's exactly real time with SEC filings, but again, just a further motive to, or further positivity to my trade thesis, which is like, this is overvalued. And even the own CEO thinks so, and he sold shares. And so maybe that's what helped the fade happen sooner. But again, all in all, between all the trades I took, I definitely locked in over 6 figures on this particular trade or particular thesis. And again, if it wasn't for the actual story, I probably would have shorted this first red day on any typical average first red day. Never would have thought about it again. Right? But because I knew the story, it had me coming back for more, and I milked a lot more money out of on the table because I knew the behind the scenes aspects of this particular trade, not just technically, but the actual story and the scenario behind it. So hopefully I'm done being a broken record. You hopefully get the point of like, it's not just a technical trade. There's also some kind of story, some kind of motive that that is the driver for something to actually happen and push the stock in a particular direction. That leaves inefficiency to someone like me as a day trader or a momentum trader or swing trader to capture that inefficiency. So anyways, guys, leave a comment down below if you have any needle movers yourself that you've discovered or think there might be some. Let me know if you like this type of video. Of course, like and subscribe. And as always, if you want to get in the Clover room, we're more than happy to have you. We talk about these kind of trades all the time and are constantly looking out for these kinds of trades all the time. There's more, certainly much, much more than just these 3 I went over. But anyways, guys, thanks so much for watching, and I'll see you guys next time. Bye.